Rod Kusin and Spoos for September 19, 2016. The initial rally up left us with reason to short it. We'll talk about that reason in a moment. But the high here at around 46.50, 46.75 was pretty well seen from the composite profiles. We had an upper value area at around 45.75, 47.25, as you can see here. And the YM up at 173, we went as high as 171. So it would almost tend to suggest that we still have a little room to go on the upside. But the premium gave us reason to be shorting this as we moved up to this 46 range that we see here. And that's all because of this bar on the premium here. Okay, you see our lower threshold and big drop on the premium forecasting, return back to 39.25 and a nice short. Now, as we set this up, our indicators showed a higher high pivot here with a much lower high on the premium at 701. That's real low. That's real low. Now, yes, there was a drop, and that to be expected. But as the market continued to rally up here, we were really way above that level. And sometimes that suggests that maybe we're a little premature on setting that threshold. And oftentimes you can't really see that until you've got enough data to work with. So you could have left it there and then come back and say, in retrospect, this looks like we're way too high, too far above this threshold for this to be accurate. So all you have to do is really, just look at the next move up. So instead of setting your time for the beginning of this calculation, run it beyond this pivot. It's not going to matter too much where that may be, but sometime past this. So let's say we set this for 42, 43. It's not going to make any difference. And we just come in here and we change the time. And when we change the time, we get a different picture. So that the upper threshold here, all right, 669, but the lower threshold, or pardon me, pivot here, with the higher high threshold in the lower reading of the premium. Now that makes more sense. Just as you look at where the highs of the premium are going, it looks much more reasonable. Now, there's a couple of glitches here in that on this bar, this high right in here, this is predicted. Okay, just past this line. Let's get that to show up. So just to the right of this line is your high. You see how the premium reached the upper threshold. So that's indicative of a return to this price. So what we may see in terms of a pattern is that either we drop down and hit this 39.25 level, and we don't go much further, and then we resume the rally back up, or we continue to move down, even down into the 30s, the low 30s, and we get a green day down pattern. Can't really tell until we reach this point, and it's beginning to form as we speak. And you can see where we're at right now. Okay. So now let's do a little further examination of this. Now, we're getting some nice, all right, we're getting right down there. Wow! Right as we speak, right down to that 39.25 level that we talked about. And I was going to say that oftentimes what you see happen, and you've heard us say this time and time again, is right when the market gets down to that same price that was predicted by the premium, you get another big, if you get another big spike down, it's just indicative that the market is going to continue down in that direction, which is certainly what we see happening now. Nice, very nice. Beautiful pattern there. So is this going to continue? Well, look at how far down that premium bar went. Okay, much lower, and right at about the same time that it hit that price, big spike down. That's not a random walk. That happens routinely. So very cool, very cool. Now we were going to say about the IB. The IB calculation shows this 1.5 standard deviation line down here below 35, and high probability now that will get hit because of this big spike down of the premium. And we did earlier. We did a Fibonacci extension off of point A, point B, and point C here, and a 61.8 retracement gives us a reading at around 33. So that seems very probable that it will come back down here. But you got to watch. Once we reach that level, we still get a nice bounce in the latter part of the afternoon. It's possible, at least. Okay. So let's go back here. Just a couple of additional points to keep in mind. Oh, I love it. What other tool do you know of that could have predicted that? Premium is a beautiful indicator. Now the way we look at our threshold, let's just see if we can show this a little bit more clearly. We'll use the existing line as a basis for making a general comparison. Now, we're in the threshold, where the upper threshold here at 684. All right. Now that particular threshold actually is only valid for the market as it rallies up. The lower highs, there's a different threshold that needs to be calculated, and we'll show you that in a minute. But the concept is, like if you look at this drop here and the move back up, you see how the premium, the highs of the premium come to this point here, and then we drop into a lower high over here, okay, and then ultimately lower than the threshold line. Oh, nice move down. Lower than the threshold line in here. So if you were to draw a curve, you would see that this is your overbought range as the curve begins to slope down, all right, from here to here, and then ultimately below the line. That's where your pivot is. That's where your true overbought level is. Okay. Now we can put an indicator on here and plot that. Let's put that in the right subgraph. There we go. So you see how that's beginning to drop off here. Okay, let's go back. So now, as you move up to this area in here, all right, again, at this high, you notice that we were failing to hit this threshold at 684. And then we get a corresponding drop again. And then we move up one more time in here. And on this last pivot bar, okay, let's zoom in on this. We're just barely breaching this threshold, and then down we come. So we came down. We didn't drop below this lower threshold here, but came back up, and once again, you know, just barely breached that threshold here, and then down we go. And where shall stop? Well, we know that. So the other approach to take there is to set up a lower high threshold. And the only way you can do that successfully with this indicator is to get past this period in here. And to do that, I think we would probably need to set it right at around something past 923. So we're going to do that real quickly. Okay, that didn't quite give me what I was looking for. We're still looking at a higher, an HT up here. So maybe past 931. Okay, there we go. All right, so now we have these lower high thresholds, and this is a little easier to see. We get pretty much the same result, however. The lower high thresholds here are moving up as they should, and then as the premium drops below that level, we get our short. And this is maybe just a little bit off. Normally we would see this below, and we've got it above right now. So it's probably because this needed to get reset in here with that pivot right there. Okay, we use a left-right strength for establishing the pivot, and this may be just a little bit too large, so it doesn't show that pivot there. We'll see if we can pick it up this way. No, it still didn't pick it up. But really, the concept here, if you look at this higher entire high here. All right, look at where the premium was at that time. Let's just use the data window for that. The premium was at 682, right? 682 on this pivot at 43.75. 682. And when we come over here, we see we're at 682 again. 43.75, we're at 682 again. And so we're right on the money there. And we get the corresponding drop. And you can see from the indicator we were really losing steam here. So, nice drop. We really like it. So, brief video, you saw this coming. How'd you know? Because of the premium. I'm Rod Goosen and Spoon for Risk.